Hey guys, welcome back to the Vanguard Portfolio update number 2. So this is my second portfolio update and I wasn't sure how often I was going to do this type of video because I wasn't sure who was interested, but it turns out to be the most popular video on my channel so far. So I decided that it makes the most sense to do these updates on a monthly basis because a lot more people are interested in Vanguard than I realized. So my last Vanguard video that I did had received a lot of comments and questions, and so I want to first and foremost go through some of those comments and clear up a few things before I show you my portfolio change in the past month. However, if you are not interested in my responses to these comments, which is totally cool, then go down to the description below and you'll find the timestamps and you can just skip straight ahead to my Vanguard portfolio review. And also, if this is the first Vanguard portfolio update that you're seeing of mine, I would recommend going back to the first video because I speak very specifically to why I made these investments and why I choose these specific funds. So if you're interested in that, then go back to that one and then come back to this one. So the first comment that I want to address today is somebody asking, so you're planning on holding up to retirement, ? Is that why you're only investing in funds and ETFs rather than some individual stocks? So the answer to that is I do invest in individual stocks, but that gets a lot less of my money than index funds and ETFs. And that's because I feel most comfortable investing in index funds and ETFs for multiple reasons that I kind of talk about throughout my videos. But I do hold individual shares in my Trading 212 account, my Coinbase account, and my eToro account, which I've never shared my eToro account on this video on this channel yet, which I will get to at some point. But that's where I hold my individual shares, and Vanguard is what gets the most of my money, and that goes into index funds. And I didn't answer about holding up to retirement. So this right here that I'm showing is my stocks and shares ISA with Vanguard, and this is for my early retirement. So I will be accessing this way before what you would maybe consider a traditional retirement age. The plan is to access some of these funds within the next 10 years. So I won't be holding these for another 40 years. It will be accessed much quicker than that. The second comment I'm going to address, nice video D, thank you. Other investor channels actually list their amounts in each fund. Any reasons why you're not? Keep up the good work. So this is a really good question and I'm really happy it's come up actually because it's really allowed me to reflect on what I want to share and what I feel comfortable sharing and what I don't feel comfortable sharing. So the decision that I've made is that for this stocks and shares ISA with my Vanguard account, I will not be sharing the exact amounts because this is actually the investment funds of both myself and my husband. So it's our account, and I think out of respect for him, I'd just rather not share that. And so, yeah, that's basically the answer to that. However, I do share my Trading 212 and my Coinbase portfolios, and I will be sharing my SIP portfolio with Vanguard as soon as they decide to finish this transfer from my employer-based pension. So I'm happy to share that one because that's my pension, and I'm happy to share the numbers because I know people sometimes find it really helpful to see numbers. But in terms of this stocks and shares ISA with Vanguard, I decided I will not be sharing that on my channel. The third comment is, why did you decide to sell Life Strategy 100? Was it because it was not performing as well as you had thought it would be? Because I'm about to start investing and that's the first one to start with. So actually my Life Strategy 100 investment performed well. It performed at around 5%. I got a 5% return when I sold it, so it was fine. I was in the green, I was happy with it. But the reason why I switched is for two main reasons. The first reason is because the Life Strategy funds are quite UK focused, UK biased, and so that is not really something that I personally am interested in. Obviously I live in the UK and that's great, but in terms of my investments, I don't want it to be UK heavy. Secondly, it was to do with a change of strategy. So the live strategy funds with Vanguard or any other type of investment brokerage, those blended funds generally are really good as a one-stop shop. So you can buy one of those funds and you've got so much diversification, you don't really need to put your money anywhere else. And I personally wanted a bit more choice, and I wanted to make a few more decisions in terms of exactly where my investments were going. So I decided to change my strategy to what it is today. The fourth comment I received was, why own VWRL, that's the global tracker, and then own regional ETFs? You're increasing your concentration in certain regions and reducing diversification. Good question, yet again, but this is what I've decided to do, and it's definitely intentional. And it's intentional because I want more exposure in certain regions. And so it's actually a pretty good strategy if you want to get more exposure in a specific region. So that's exactly what I'm doing. I have the global tracker, and then on top of that, I have more money invested in specific regions that I'm speculating will do well in the future. Comment number 5, I have a similar strategy. One thing you're missing is small caps. Not sure if any of the funds mentioned have exposure in that area. Again, really great comment. You guys have fantastic comments and questions. So I agree. I do not have any small caps in my fund. And if you're not too sure what small caps is, it just stands for small capitalization. So it's really companies that have a smaller market capitalization or smaller value, I guess, as a company. And this is currently under $2 billion. So if a company has a market capitalization of less than $2 billion, then they are considered a small cap. There's also mid-sized caps and large caps, and my funds are primarily large capped funds. However, the FTSE 250 is a mid cap, so I do have some exposure outside of large caps, but yeah, you're right, I don't have any small caps. It may be something that I consider in the future, so I appreciate that comment. And so the very last comment that I'm going to address for today said, great video, what made you go with the Pacific Index Fund over the ETF? New to all this and currently investing in the S&P 500 and the FTSE 100. Congratulations for being new to the investing world, that's really great. In terms of why I picked the Pacific Index Fund over the ETF is because it had performed better over the past 5 years. So I went through both, I compared the investor information sheets in order to see the fund performance over the past 5 years, and the index fund had performed better over those 5 years. So I decided to go with that one. Pretty simple as well. But also a really interesting thing in terms of Vanguard, I don't know if it's the same with other platforms, is that with index funds, you can buy less than one unit. So you can buy fractional shares. So I can buy half of a share or half of a unit. Whereas with ETFs, you can only buy one whole unit. So if I wanted the S&P 500 ETF, for instance, I have to buy at minimum one share. So I can't buy less than one. So it's not really a deal breaker, but in terms of point of access or point of entry, then I guess it is easier to access these index funds because you don't need as much money. But that's not actually why I did it. Again, it was because of the performance, but I thought I would throw that in there too. Right, so now for the good stuff. Let's get to the performance of my Vanguard portfolio this month. I decided to do it today because the stock market has taken a real beating this week, and I want to show the downside as well as the upside. So again, in my first video, I speak to why I'm investing in these funds. My goal weight remains the same, so 50% for the global tracker, 10% for all the others. So for the FTSE world, the current weight is at 46.4%, so not that far off, but I plan to increase that a bit for next month. Next, I've got the Pacific Ex Japan Fund, and that is currently at 15.3%. As I said in my previous video, I'm actually looking to maybe increase this fund. I'm happy for it to take up 15%, so I'm not really looking to change that. Then is the S&P 500, the current weight is 7.1%, so this is a bit lower than I want it. So when we get paid at the end of this month, I will definitely be putting money into the S&P 500. And also, as it's quite down this week, I'm hoping by the time we get paid, it will still be down so that we can invest and benefit from the sell of the stock market. Next is the FTSE 250. And currently that is at 12.1%, so a bit over, so I won't be putting any money into this for next month. Then I've got the ESG emerging markets, which is at 9.6%, so that's pretty much bang on. And last, the FTSE All World High Dividend, which is also at 9.6%, so I don't really need to change that either. So I'm going to show you last month's return rate so that you're able to see the difference side by side of last month's return versus this month's return rate. So last month, the return rate of the FTSE All World was 2.92%. The Pacific Fund was 14.1%. The S&P 500 was 2.63%. And the FTSE 250 was 0.2%. ESG emerging markets was 3.69%. And the FTSE All World High Dividend was 10.3%. Now let's look at this month's. So currently this month's return rate for the FTSE All World is negative 0.11%. So that's fantastic. Not the direction I thought it would go in, but again, this stock market downturn has happened. Whether it's a correction or whether it's crashing, I really have no clue, but it really goes to show that there has been a downturn in my investment portfolio since last month. Next is the Pacific Fund, and that is at 12.91%. So this has really held its weight. So this one has not failed me this month. I'm really happy to see it's still above 10%. That's great, and I'm really glad that I've got a 15% weighting in this fund right now. Next is the S&P 500, which is a return rate of negative 0.41%. So this is not fantastic, but again, as you can see, the FTSE All World and the S&P 500, I am probably going to invest more money into that this month because the return rate is in the negative, so I see it as kind of a discount, and also so I can get those weightings up. Next, I've got the FTSE 250, which is at 3.11%. So this has actually seen a jump since last month. I'm excited to see what happens with this because the UK, I don't know if you've seen, but in terms of the British pound, it's spiked up recently. It's on a bit of a bull run right now, which is great to see. But also because of this vaccination that we're doing in this country, it really is looking a bit more positive in terms of us opening up in time for summer and getting this economy stimulated again. For the emerging markets, I have seen a return rate of 1.79% this month, so it is down by about 2%. Not really that shocked, and it's also not that bleak. And lastly, I've got the FTSE All World High Dividend, and that is at 6.8%. So again, down, but it's held its weight somewhat, and I'm quite happy with that. Now, in terms of the total return rate, I do need to make clear something about my last video. So in my last video, I showed you the total return rate and I took it straight from my Vanguard account. However, when I ran the numbers, something wasn't adding up and I was really confused. And then I realized that the total return rate that I reported last month included the investments that I had sold and got a profit from. So it wasn't just inclusive of these funds right here that I'm showing you, it was also taking into account my previous investments, which I had sold all of them for a profit. So now on, I will be calculating the return rate just specific to these funds. So I do it manually myself because it's much easier to calculate that than what Vanguard provide me. So the total return rate that I have seen for this month is a whopping 4.02%. So it's not fantastic. That's a lot lower than what I showed last month and I explained why. But this also is a lot lower because of the current state of the stock market. So my portfolio really has taken a beating in the last couple of days. It's the nature of the game. I'm really not worried about it, but it goes to show that these investments can be quite volatile. They can go up and they can go down. But I do want to encourage any investors that are out there who are panicking about the stock market going down. Do not panic and do not fear. Remember, you have not lost any money until you've actually sold the investments. So if your money still resides in your investments, you really don't need to worry because you've not actually lost a penny. the stock market will go down and it will go back up. And one thing that I really recommend doing is taking a big picture look when it comes to investments or a company's value. Sometimes we look in the past month or the past week and we just see all this red. But zoom out a bit and look in the past year or 2 years or 5 years, and you'll probably see that what looked red and really bleak actually isn't that bad when you look from a long-term perspective. So I really hope that you've enjoyed this video. I'm hoping that these portfolio updates are encouraging to you as an investor, are helpful to you, and just gives you a bit of a nosy into somebody else's portfolio. As I said, once my SIP finally transfers over to Vanguard, I will be sharing that with you too. Please don't forget to like this video and subscribe if you're not already subscribed. Also, please write your comments down below. I love to see how many comments the last video got, and it was great to engage with you guys. So let me know what you think about my portfolio, what you think about the return rate, what you think about your investments, whatever it is, I'm interested to hear. But until I see you again next time, take care and thank you for watching.